Anna is effectively a broker's. They buy and sell shares. The reason it appears to have got into trouble is that Jon Corzine, who was the former chairman of Goldman Sachs, joined the company in March last year with a big plan to transform effectively a brokerage firm into an investment bank. Part of these plans, Anna, was rather than just accepting commission and buying and selling on behalf of clients, they were going to take some pretty big bets with their own money. And these bets appear to have soured. Now, it's known that the company has invested heavily in European government sovereign debt. They're the link, the circle gets squared here because they have been piling into Greek, Portuguese government bonds. They've been buying them up presumably on the understanding that these would be a surefire bet, that the European Union the eurozone would stand behind these countries, that the interest rates on offer there were incredibly attractive, of course, if you get your money back. What we know, of course, from last week is that Greece is likely to default on around half of the debt that it owns private banks, and it would appear that MNF Global has been left holding a load of bonds that no one wants, and it could hit the company with up to $6 billion. So a lot of questions being asked. It's not yet clear what's happening. We know that before the weekend they were trying to find a buyer for certain parts of the business, and confirmation this morning that the shares have finally been suspended.
Fair number of jobs in this company, of course.
Yeah, not least 700 in London. Interestingly, Anna, we've had reports this morning that people have been turning up for work and not being told to go home. We've also had reports and emails directly to us here at Sky News with employees saying, look, there are parts of this business which is not open to new business. They're not accepting, they're not doing new business, and they're only closing down positions. So there's clearly something wrong here. The fact that the shares have been suspended shows that this is a company that's in trouble and has to make some sort of formal announcement to the markets about where its immediate future stands. But clearly, I mean, you've seen the share price fall from, since the beginning of October, it's about $7 a share. It's fallen to below $1. The alarm bells were ringing for some time, but it is looking now that this may well be the highest profile casualty, certainly in terms of finance, that we've seen of the sovereign debt crisis. Worth also asking the question, and we don't know the answer to this, Anna, it's not a traditional bank. It doesn't hold people's savings. It is a brokerage house, but it'll be interesting to ask the question, to what degree, if this company disappears, is there a systemic risk? The transactions that it made may be quite complex and interwoven. We'll have to wait and see how things spin out.
OK, we'll let you go and dig. Thanks, Joel, for that.